and turn to your other big story of the day, and that is what else? It is Tesla. That electrified start to the year simply continues. Stock surging nearly 20% for its best day in roughly 7 years. And get this, the recent rally puts Tesla's market cap at $117 billion, Guy Adami. That means it is bigger than, or almost bigger than, IBM. It is bigger than American Express, bigger than Starbucks, bigger than your former company, Goldman Sachs. Tesla now up 86% this year alone. Dan, your big take on Tesla's big move, not just today, but this year.
Yeah, I mean, just real quickly, I don't really have much to add other than it's a mania like I've not seen since the late 90s. And I'll just tell you that. I mean, the stock will not be at $750 in a few months from now. It might be $2,000 or it might be, $300, but it's not going to continue like this sort of activity. It can't. The fever is going to break at some point.
Who's the Tesla buyer here?
No, I can't answer that question. I mean, clearly, I'm somebody that thought it was going to stop at $320, and here we are, pushing up against 800. So, again, I'll say it for the 500th time that I've absolutely missed the move. I don't know the answer to that question. Now it seems outrageous. However, you could have said the same thing 2 weeks ago, $200 ago.
This was 2 months ago, 6 months ago, whatever the number was. This was a business that was going out of business. Everyone was worried about that. And now this last leg, in particular today, was about the batteries. Yeah. So if you see batteries now, it's either a car company and then it's a whack-a-mole game. It's a car company, it's a tech company, it's a battery company. For me, it's not about short covering anymore because it's only about 2 days to cover. For me, when you say who's buying it, look at this environmental. Look at ESG. There's a lot of money getting pushed into this, thrown out of chemicals, a lot of money chasing these type of investments.
But and this would be, I think, Karen, considered one of, if not the only sort of pure play on electrification. I mean, there's hybrids, there's windmill companies, but this might be the only one. But that doesn't mean that it's worth this valuation.
Right. Just because you're the only pure play doesn't mean any valuation is valid because you're the only one. One thing, I checked on a borrow today. I was just curious, how expensive is it to borrow? Not expensive. In fact, you get a rebate. That was a little bit surprising to me. There was...
In English, please. Karen.
Meaning that this is not a squeeze where people are forced to cover their shorts. That's not what's happening here.
What does that mean, you get a rebate? For our viewers who may not be professional short sellers.
Right, so you lend your stock, and actually you get paid a small amount you get paid a small amount to short their stock. You get a little bit of
why
credit.
would that's rare.
No. That's
on a company like this, some micro cap biotech that's got all goldfish remedies or something.
I thought it would be expensive to borrow, as many short squeezes are. That makes me.
So real quickly, ARK Investment, they've been on the show, they've been on the network a lot. They had this story down. At least it's playing out to the way that they think it should have. I just make this one point that if you do think it's a hardware company, you say, oh well, Apple's a hardware company, and but here's the thing: they had 65% gross margins on a business that they were basically incubated from 0 to 150 million units a year, creating an ecosystem around it. I mean, a car is a depreciating asset that you keep for, talk about elongated upgrade cycles. I mean, people are not, I know a lot of people who bought their Model S in 2013 or 14 who still have them. They have not updated the design. This is a car company, and ultimately none of these car companies will ever, they've never been able to keep a $100 billion market cap. So
we had a couple Super Bowl commercials for electric cars last night. They're coming after Tesla. Anyway, the Chartmaster says it may be time to pump the brakes on the stock. Cornerstone Macro's Carter Worth over at the Plasma to break it down and chart it up. Carter, lay it out.
Well, it's a fun one, and it's a dangerous one, but that's what fast money is all about. Let's look at the angle of the line and try to put it in perspective. So here's a chart, no judgments or annotations by me, and then let's move it forward and see what we've got. So we have this breakout. That's fairly well defined. And then we have the resolution of the breakout, which is the ascent since that point. And then we have what I think you have to say is the blow off. We are literally going up and to the left. You're not allowed to do that. You got to go out to the right every day. It has all the elements of what you would call parabolic. And so the issue is it's sort of knowing who you are in the market. We know that a breakout is a fairly well-defined thing. Long-term, short-term, but tactically it's no different, and history has shown this. You see it in marijuana stocks, you see it in Bitcoin, you see it in .com stocks, you see it in so many instances. Even if it triples, a lot of people believe that, go to that 7,000 price target from ARK, that the path higher presumptively passes through a lower price. It's just too hot.
Is this basically, Carter, and come on over and you can answer, or somebody else can answer as you're walking back, a stock that, for lack of a better explanation, is going to go up until it stops? You know what I mean by that? I mean, people are just going to buy the momentum until it doesn't work anymore. None of the numbers matter.
Well, so a couple of things. I mean, there's no way to approach it. Fundamentally, you can make up a long-term story for anything when you have no profits, right? McCall Saylor never had a profit. They sold themselves. They were the first site to AT&T for fortune. The point is, though, it's not a short interest story anymore. There's only 21 million short. It traded 47 today, biggest volume ever. In fact, the real thing is this. It's only done this big a move twice in its history. On the IPO, up 40%, and one other time up 24%. So this is the third biggest day ever. And then the value traded, this is the crazy part. Today's value trade is $35 billion. That is 5x Microsoft and 2x, yes, Apple. That has only happened one other time in the history for Apple and two other times for Microsoft. So it's a frenzy.
I know you want to get in your camera, but that's an important point, I think, to reemphasize what you just said. And you're not making a judgment call. Nobody out there, other people, that guy would say, don't at me, right?
Don't at me, man.
Which is the dollar volume traded on Tesla was 2x.
Well, it's more than 2x Apple and more than 5x Microsoft.
Which have market caps at 8x Tesla.
That's right. 1/3 of the float essentially changed hands today.
So let's say you did have the cojones to short this. Where would you put a stop?
Well, remember, we've done this on the desk endlessly. We've been long, we've been short. That's the nature. But you like any position, you try it. And if you're wrong, you have your stop loss and you get out. But it has all the elements of what a blow-off top looks like. You draw in a lot of people. It gets steeper and steeper. And at some point, even if you believe it triples, the path higher passes through a lower price. Or what Dan was saying, it could be 300.
So when you see, and this question is to anybody, because the market cap, to your point, or the volume of shares outstanding, Tesla effectively, to Carter's point, traded 1/3 of the amount of available stock that is outstanding. I'm just looking at Apple here to try to figure it out. Apple has how many shares outstanding? 4.3 billion, according to Capital IQ guy, and it traded 43 million shares out. So Apple would have had to trade 1 billion plus shares to do effectively what Tesla did today.
I think Carter makes many great points. That's the most important point. It traded 46 million shares today, typically trades 12 on a day where you saw it going parabolic. If there was ever a day to say this might have been it, it's today based on everything you just brought up and Carter said earlier.
Yeah, I'll make one last point here. So if you're looking at the options market, you look 1 month out. What is the options market expecting? The at-the-money straddle, the 780 straddle, that's the call and the put. It's $140. You divide that by 780. That's the stock price. It's telling you that's an 18% move in either direction. That's a $140 billion stock expected to move that much in 1 month. It's just telling you.
I did it today.
Well,
19%.
I'm just saying, but that is just extraordinary.
Extraordinary.
All right, wow, good stuff. Carter Worth, some good data, again, on Tesla, which is truly a remarkable company, a remarkable stock.